So Israel launched an attack on Iran, and of course that tends to weigh on global markets. Any flare-up of violence in the Middle East. You can see those stocks generally mixed today. The impression seems to be that, like the Iranian attack on Israel almost a week ago, the effects of this one were limited. We're joined by Eddy Gifford, wealth advisor at TACTIVE, tech space for active investing. Eddy, thanks very much for coming on the show.
Thank you for having me.
Start off with oil and gold. It looks as though the market not too alarmed about this Israeli strike, although gold prices are up, I know.
Yeah, I mean, when you looked at what happened in the futures market last night when we first heard about the strike, we did have a significant jump in oil. We did see the futures drop pretty significantly. And so I think it's showing that investors are definitely on edge. You know, when we came out today and it wasn't like as bad, or it didn't have like the big boom, so to speak, in Iran, Israel. That's where we saw the markets kind of like say, okay, no, we're going to be okay. But there's a lot of stuff going on right now that can really just beat us up. And you can tell that investors are very, very edgy right now.
What are you paying attention to mostly?
Big picture, we're definitely watching conflict, and we've been paying attention to gold for a long time now. Gold is typically a leading indicator. It typically is warning us of something to come. And so although we've seen this tremendous rally in the market since October, we also saw gold kind of creeping up, especially more recently, which caused us to kind of maybe take a little bit more cautious stance when it comes to markets. Anytime gold is running, usually that means that there's a sell-off of brewing, and we've definitely had a pullback. I don't know if I'd necessarily call it a sell-off yet. I mean, we were straight up since October, so we do need to breathe from time to time if we're going to hit new highs. The question is whether or not this is a breather or an actual beginning of a correction. So we're really paying attention to 200-day moving averages right now. If those get broken, it could get real bad real fast.
Yeah, it's interesting. I mean, gold, as you say, trading in record territory at a time when the U.S. dollar is pretty strong. So that does indicate some people are nervous out there.
Yeah, definitely. The question is who's buying the gold, and we don't necessarily know, except for someone's obviously, or nations or countries or investors. They're obviously accumulating, and we just keep seeing gold hit like new highs and you know, breaking through that 200 on the GLD ETF and has really kind of released pressure from a resistance standpoint, and that's allowed it to kind of continue to trickle upward, especially as people are still, I mean, everyone's on edge. We got an election this year. We have conflicts all over the world, and so you know, the best term, it's not a professional term, but people are jumpy.
Yes. Talk to us about the chip stocks. They are now down about 13 or 14% as a group from their highs of last month.
Yeah, semiconductors, obviously, like this, they've been on this tear with NVIDIA kind of leading the way, and now we're in this scenario where we're kind of seeing a little bit of consolidation here. We did break the 50-day moving average, so that is something that kind of has our eyes a little bit more open. We don't necessarily see this as like, oh my gosh, it's time to run for the hills, but we are in a situation now where if conflict does continue to spread, we could see this accelerate very, very rapidly. Of course, if kind of over the next week or two, if it seems like all skies are clear, we're kind of moving in at least a semi-positive direction when it comes to conflict, we would expect the semis to kind of ramp back up and run again, because AI is still here. It's still making people and companies more productive. But again, when you go straight up, you got to pull back. If you don't pull back, then that's when we get the crashes. So like we wanted to pull back 2 months ago. We're getting one now. It may be a little bit more violent, but that doesn't mean that we're in a full-on like sell-off scenario.
What about Netflix? Are you tempted to scoop up some of that stock? I mean, 9 million net new subscribers in the latest quarter.
Netflix is an interesting one. Ever since they announced that they were going to crack down on the password sharing, the thought was always that subscriptions should rise. So the issue now is they've been a little bit more strict with their password sharing. And so how much of these new subscribers were current users that were just sharing a password compared to how many of these new subscribers were actually new subscribers? And I think that that's where we've seen the sell-off occur, is that we did see this really big run up where we're up, almost over 30% year to date, and then they come out and maybe the guidance isn't what they expected. And then also when you say, hey, you know how we've been measuring things for so long, we're not going to do that anymore. And Wall Street never likes change. So even just that, like the change in how they're going to report, I think is causing a sell-off. I still think that Netflix, long term, they're still a good company. They're the leader in the streaming space. I definitely don't think they're going anywhere, and you're not going to be sad if you buy it and hold it for the next 10 years.
What do you think about Netflix, though, going to be vaguer with investors as of next year about their subscribers? Because it's a widely watched metric, but they say, well, we got all these different tiers now. It would get confusing.
I think it's Netflix telling us that they're kind of capped out, and that the streaming space has become very mature. When we look at like 2008, 2009, 2010, Netflix bucked their trend in 2008, where it was one of the only stocks that was up when everything else was down during the Great Recession, and so. But that space has matured, and it's almost more relevant now from the standpoint that it used to be everybody had cable. Well, now I don't really meet too many people that have cable. Everybody has some type of streaming menu that they use, and so I think that that what Netflix is kind of telling us is that, hey, streaming is the main game now, and so maybe the growth potential isn't necessarily in the subscribers, but it's more in potential ads or more in live TV, because they're starting to incorporate some live stuff and that type of stuff in there. So I think what they're telling us is that space is changing. So maybe they're trying to get ahead of it, or maybe they're just letting us know that they're slowing down when it comes to ads.